What bit of the coin is yours? In particular, I want to talk to you about the volatility that's come over Bitcoin in the last month. It's been quite a wild ride, up, down, sideways, you name it. Let's have a look at the chart in Bitcoin for the last year, but really in the last month. And you'll see since January, it broke out on the upside, spectacular. If you had a long position in Bitcoin, your coins went from being worth 15, 20,000 a coin to look, up here, well over $60,000 a coin. But then at some parts in the latter part of May 2021, it reversed itself and went down to almost $30,000 a coin. That's probably too much volatility for most investors. What's the reason for the collapse in the Bitcoin price in the middle of May? Two reasons were given, at least in market opinion. Whether they're accurate or not, I can't vouch for that. I can pass on to you what I heard. One is that Elon Musk of Tesla decided not to accept Bitcoin in payment for his cars. Do I think that that would wipe off so much value of Bitcoin? I don't think that's quite the only reason. I think there are extenuating circumstances. The other reason given for the collapse of Bitcoin was that the Chinese government said that its banking system could no longer, in effect, have clearing accounts for Bitcoin investors. So that would quite a blow, as the Chinese market for Bitcoin investors is an important market. Do I think the Tesla explanation or the Chinese explanation explains the only reason for the volatility in Bitcoin? No, I do not. They could have contributed to it. They may have had nothing to do with it. The point is, all assets, if you're an investor, all your assets will be volatile. The house you own, the stocks you own, the cryptocurrency you trade in, it will go up, it will go down. And it's your job as the investor to decide when is a good time to sell and when is a good time to buy. In the minds of some investors, assets just simply go up if they're good investments, but that's not really always the case. Let's have a look here. You can see, even if you were long Bitcoin, you might have, if you had a margin account, your margin money might have been called in some of these dips. So even while, yes, long term it had a spectacular rise through 2021, the fact is it's always going to be volatile. So I suppose in deciding whether Bitcoin is the right investment for you, what I want to impart to you is that you adopt strategies that suit your level of risk and the level of exposure you can have to such a volatile currency. With such a volatile asset, and Bitcoin is no more volatile than some other assets, but in the recent weeks it has been volatile, what are ways to mitigate risks? One way is to put in stop loss orders. You can say, if it drops below this price, I want to sell. You can put in buy orders and say, if it gets to this price, I will buy in. You can have long straddles, you can have short straddles. There are a host of sophisticated and not all that sophisticated tactics that one can enter into to trade Bitcoin, but to limit yourselves so you're not simply exposed to big drops in prices from 60,000 to 30,000. One more measure of whether an asset is cheap or expensive is to look at its RSI, Relative Strength Index. In the case of Bitcoin, in the case of any other asset, you can look at the RSI and come to some judgment whether you think Bitcoin on that day represents value, a buying opportunity for you, or whether perhaps its price has gotten away from itself and it might be a time for you to sell and take some profits. Nobody ever went broke, as they say, taking a profit, and Bitcoin is no exception, that there are moments when it trades at 60,000 a coin, 58,000, and you can lock in a profit. Don't be afraid to do that. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.